Okay. So
So,
if we're looking at topic 10, are you happy with those study units or do we need to go through any of the workings? Like, which ones did you struggle
thing
with?
I didn't get to the reconciliation.
Okay.
Would you say that's straightforward? It's just reconciling. Is it the favorable and unfavorable, just getting the variances and then
No,
reconciling it with the budget?
no, not quite. Okay, remember reconciliation is looking at a process of checking. So when you're looking at standard costing, obviously you have an idea of the variances, then those variances need to be explained. So the recon is a little bit different, but it does build on the variances that you have existing.
Mm.
Okay, so what do you want me to focus on? Do you want me to go back to study unit 24 and look at any of those workings, or should we look at 25 then? What would you like to cover?
Um, okay, let me just see then what variances, the total manufacturing total variable overhead. So there's a total manufacturing overhead. What do you call it?
Which page are you looking at? Study unit
Let me
24.
just get to the total variable manufacturing overhead. It's page 75. Yes,
75.
yes, it's study unit
Okay.
24.
Okay. Oh yeah, here. Page 75. All right. Your question?
The activity 24.9,
Yes. Did you struggle with this
calculate the
one?
total variable manufacturing overhead variance.
Okay, you struggled with this one. We can go
Oh,
through it then quickly. It doesn't look too long. We
okay.
can discuss it.
Hmm. Just so I can then continue again
Yes.
on my
Okay,
own.
that's
And then I'm
fine.
thinking maybe we do relevant costing. I'd say it's the next unit there.
Okay. All right. So if we look at this activity, remember the most important thing to do is to understand the scope of the question. So when I look at a question like this, the first thing I'm going to be doing is highlighting things that are important. So obviously, budget is going to be compared to actual. Okay, and that's going to establish a variance. When you're looking at budgeted, remember the budgeted is going to basically provide you with those standard amounts in terms of standard costing, where you're looking
Mhm.
at the ideal situation. Okay, so standard costing is part of the whole idea of budgeting because you're trying to work out that per unit cost that you can then use to do certain calculations. Is that right?
Mhm.
Okay, so here you've got a total variable manufacturing overhead. So, what is a manufacturing overhead? Do you know what that is?
Yes, it's all the overhead, so things that's not directly linked to the production.
Correct, yes. All right, so when you have overheads, remember the problem with overheads is it applies to the whole business. And that's why when you're looking at products or you're looking at a process, you need to allocate those overheads somehow to the actual
Mm.
process. So here they've told you that the variable manufacturing overheads that vary with hours worked. So hours worked is the cost driver,
Mm.
meaning the more hours we use, the more variable cost would be allocated to that particular product. Okay, so here you've got 10,000 Rand worth of overheads. You've got the number of labor hours amounting to 400 hours. And then they've also given you the production, which is 500 units. So they're telling you how much is being produced in that facility. And then if you look at the actual, obviously here you can see that the variance is favorable. Do you agree?
Mm-hmm.
Okay, because it's less than what we expected, and the costs are obviously lower than what we had budgeted for. So
Mm.
that's the first good sign to identify. Then
Mm-hmm.
you've got labor hours, okay, and you can see that the labor hours were actually more than what we had expected in terms of the budgets. All right, and then production also more than what we had expected in terms of the budget. All right, so those are the values that you've got in the question. All right, the question said calculate the total variable manufacturing overhead variance for the period for overheads that vary with the hours worked. Okay, so obviously the focus is going to be on hours. How many hours did I actually use? Okay,
Mm.
versus how much hours did I actually budget for? Right, so you can see that the labor
Yes.
hours here that was actual was greater than what was budgeted.
Mm. So
Okay,
that's
so
unfavorable if we
well,
worked,
remember
did
if we're
labor
looking at
hour variances.
yeah, if we're looking at labor hours in terms of production. So, but
Mm.
be careful how you interpret this because the production was better than expected, but obviously hours
Mm.
was more than expected. Do you see that?
Okay, yes,
Okay, so
okay.
I mean, if you're using a little bit more time, but you're generating more products, then it's actually not a bad thing necessarily because you've still got more than you would have anticipated.
Yes.
Okay, obviously you could maybe look at efficiency and you could say, well, based on the number of hours, were we as efficient in terms of production? But that would be a separate consideration. Here they just want you to look at the variance for the hours, right? So if you look at their working, you can see, remember those formulas you saw in the textbook? Okay, those textbook formulas highlight what we actually have versus what we think we have in terms of production. So have a look at the actual. Actual was given. That was given in the question.
Mm.
Do you agree?
Yes.
Okay, but now remember we need to NB, we need to note what the standard is. Because if you go back to the question, remember the budget was only based on 400 hours, not 410 hours. Do you see that?
Yes.
Okay, and that's why it's important to note what the individual cost is per hour, okay, or per unit, depending on what you're looking at, because you need to make the budget coincide with the actual, because the actual is a little bit more than the budget. It'll never be identical, right? Remember, actual will always be different to what you had budgeted for, but based on the budget, you should be able to get your standard costs. And that's why they've done these workings here. So if I just go back, you can see here, let me just go highlight the right thing there. Okay, you can see here that they're taking into consideration the actual hours versus the rate because they want to know how much did it actually cost in terms of the overheads, right, for this particular business. So this business spent 9,840. Okay, you know, if you split that up, you've got the number of hours and the rate per hour. Okay, this rate, how did they get this rate? Do you know? The actual.
Didn't they take the units produced?
No, it's got nothing to
I
do
don't
with
know.
units. Remember, it's per hour. So if you're looking at per hour, you're basically going to be going backwards. So this is more maths. Okay, remember they said 9840 was the total, and that applied for 410 hours. Do you agree?
Yeah,
So
so
obviously
it's
per
divided.
hour would be division, right? So if you divide
Okay.
the total by the number of hours, you should get 24.
Okay.
All right. I see there's a little working here, working 3. Let's go down and see what did they do. Actual rate.
Actual
Yeah, it's
rate.
exactly the same. There we go. Okay, does that make sense? Okay,
Yeah.
so just remember when you're trying to determine what the actuals are, sometimes you might have a question that's a bit different where they give you this and they don't give you that, maybe.
Yes, yes. So
Okay,
you'll
and then
have
you might
to
have to do it
work
differently.
it.
It just depends on what information is given. As long as you remember that if I'm looking at actual, actual means, okay, based on actual production. So in other words, in this case, the 410 hours. All right. The cost could be given, then you could work out the per unit, or the per unit could be given, then you could work out the total. It doesn't really matter, but they have to give you enough information to calculate the actual, which we now know is 984. Okay.
Okay.
Right. So now, if you look at this, they said the standard variable overhead allowed at a standard rate for actual production. See, actual production, okay? So what we actually used, okay, in terms of time, all right? And obviously based on the standard number of hours, okay? Standard number of
Yes.
hours meaning in a budgeted situation, how much hours would I actually require in order to produce a particular amount of products? Does that make sense?
Okay, yes.
Okay, so now, okay, can I erase this? Are you happy with that so far?
Yeah, yeah, that's fine.
Okay, I'm going to go back to the main question, okay, just to show you the budget here. Okay, if you look at the budgets, okay, when you're looking at budgeting, all right, you've identified those variables as being part of the budget. So, in other words, if I've got 1,000, not 1,000, sorry, 10,000 Rand worth of variable overheads, okay, and they're telling you that this is going to vary in terms of number of hours, okay, I can see here that if I'm looking at the 10,000 hours, 10,000 Rand, and I've got the 400 hours, that's going to give me an indication of what I expect in terms of production. But the production is only for 500 units. Okay, so now if I'm looking at 525 units, then what is the budget going to actually be? Does that make sense?
Yes, yes.
Okay,
So is
because
it going to
this is
be,
based on 500, not 525.
okay, so we'll have to use the 525.
So you need to basically
Yes,
use a ratio
actual.
to get this to 525, and then you need a question mark, how many hours, and then you need question mark, how many costs. Does that make sense? That's
Okay.
basically what you're doing in this question. You're trying to take the actual and you're trying to relate it back to the budget. But remember, your budget was based on production of 500, not 525.
Okay.
That's why you have to adjust this budget to represent 525 in terms of the number of units. Does that make sense? Okay, so if I look at 525, how much percent more is the production? Well, 25, I'm just grabbing the calculator. 25 divided by 500 times 100 is 5% more than what was predicted. Does that make sense? Okay, so here they're telling you that the production was 5% better than what we had budgeted for. But you also used more hours, so that's the problem. Okay, but if you're looking at the budget, we need the budget to now provide for 525 instead of 500 because the actual production was more than what we had budgeted for initially.
Yes.
Okay, so if you look at their working, they should have shown that. Let's see. Did they? Okay, here, standard hours. All right, so see, have a look at what they've said here. They said the budgeted hours given are based on budgeted production of 500 units. Do you see that?
Yes.
Okay, so if we go and we work out the per unit amount, okay, each unit in terms of what we believe is standard will require 0.8 hours of production. Do you see that? Okay, so now if I'm looking at this, I'm saying, based on what we know, okay, I need to relate this to the 525. Okay, so if I'm looking at the number of hours that it requires me to produce one unit, they're saying based on the budget, based on the standard cost, it takes 0.8 hours per unit as part of the budget. Does that make sense?
Yeah.
Okay, so now if I'm using 525 units, okay, remember this is now 525. Okay, how many hours am I going to actually need? So what is 0.8 times 525?
420.
Let's check. 525 times 0.8 is 420, yes. Okay, see, now we know what this new figure is going to be. It's going to be 420. Does that make sense? Okay, because remember, you're taking what you had here in terms of your budget and you're trying to create a new, inverted commas, budget based on the current production. Do you see that?
Yeah.
Okay, does that make sense?
Yes, yes.
Okay, all right. So now, if we go look at the rest of the working, you'll see they should have worked out the unit cost as well. Did they? Yes, they did. Okay, remember? Again, based on the standard. See, the workings are very good because they've broken it up twice. Okay, they've talked about the standard hours and then they've talked about the standard cost. Do you see that?
Yes,
Okay,
yes.
so now, again, coming back to that question. All right, we just talked about the 525, okay, and the 425, 420, okay?
Yes.
So now we know that this budget, based on the standard costs, we've now related our production in terms of 500 to a production level of 525. The big question mark is, okay, we need to now relate our standard costs in terms of what we had budgeted to the current situation based on 525 units. So if you look at this, okay, let me change color actually. If you look at this, do you agree based on your budgets, you said that you were going to use 10,000 Rand worth of costs, and that would be appropriated, okay, to the labor hours of 400. All right, so if you're looking at 10,000 divided by 400, that gives you 25 Rand per hour. Does that make sense? Based on the standard costs. But again, we're not looking at standard costs for the budget. We're looking at standard costs for a production level of 525. So we said 525 in terms of our production based on our standard is going to require 420 hours. Those 420 hours based on our standard require 25 Rand per hour. Does that make sense?
Yes.
And that gives you
10,500.
10,500.
So we're only using the actual units produced.
Yeah, you always use actual, but remember the actual needs to be related to the budget. Okay, so now if you look at this bit represents the actual, okay? You never, ever change this.
Okay.
Because remember, the actual is set in stone. The only difference is, well, you need to talk about this, which is the question mark, okay? Remember, the current situation, this situation here is an estimate. Okay, remember this estimate is accurate based on what you had predicted before you had actually produced goods. Does that make sense?
Yes,
Okay,
yes.
if your production is better than what you had expected, then we need to re-evaluate the budget because ultimately we're converting this to what we would budget for had we produced 525 units. Okay, because remember, we're now going to compare this to the actual, and we're going to be looking at a variance. All right, it's like comparing apples with apples.
Yeah, we just first
You
need to
can't-
get an apple.
You can't compare 500 units to 525 units
Okay.
because that's like apples and oranges. Does that make sense?
Yeah,
Okay,
yeah.
this is an apple. This is an orange. Okay, we need to convert the orange into an apple. Now we can compare those two amounts together. See? Okay, because now you're comparing this with that, and it's based on the right number of units in terms of production.
Yes, yes.
Okay. Can you see it? Can you see the logic?
Yeah, yeah.
Okay. So it's important to understand that the budget can always be adapted. This, in terms of workings, you will always adjust the budgeted amounts to represent the correct amounts that can be related to the actual. The actual you'll never change.
Yeah. No,
Okay, because the actual is set in stone. It's what you actually did.
Yeah.
Okay. And that's why here they've shown you the variance. So the variance is actually 660 favorable because you would have expected to use 10,500, but you only used 9,840. Even though you produced more, it doesn't matter. We're comparing apples with apples.
Okay.
Okay.
Okay. So yeah, so we first have to get it to the same amount of units.
Yes. You're
And then
trying
work
to
from
get the
there. That
budget
makes sense.
in line with the actual because remember, the budget was an estimate. It was a thumb suck. No one knew what was going to happen. Okay, budgets are never accurate. Budgets are generally revised, but the actuals are set in stone and you compare the actuals to the budget to see if you were effective, if you were in line with what you had predicted.
Okay. Is it always going to be the units that
Yes, because
we're
remember
going to
standard costing looks at number of units because production is measured in units. Remember, what did we
Yes.
say last time when we were looking at standard costing? Well, not standard. Well, let's talk about production in general. Okay, we can relate it to standard costs. It's look at input and output. Input, creating output, and we're looking at that process, the in between, and we're trying to evaluate how productive were we in terms of our manufacturing efficiency, effectiveness, all of that.
Okay. Okay, perfect.
Okay, makes sense.
Thanks. Yeah, I'm gonna go through more of these.
Okay, it's always the same.
Yeah,
Maybe
some
just to show you
journals.
another example. Is there another one? Yes, here's another one. See, have a look at this one. Okay, what is
Yeah.
this one focusing on? Where's the question? Here, activity
Just
O.
on top of it.
It says use the information supply. Okay, it's the same activity. They're just looking at what here?
Variable manufacturing overhead rate variance.
Here they're looking at the rate variance for overheads that vary with the hours worked. Okay. See, here they're looking at the hours, right, instead of the units. See, difference. Okay, so here this was based on hours instead of units. See, this one was units here. Let's go see. Where was it? No, hold on.
Yeah, 24.9.
This was, they say hours here. Let's just check what it said here. Let's just see here. Total variable manufacturing overhead variance for overheads that vary with hours worked.
Hours worked.
And here,
Also with hours worked for the period.
variable, but this was the variable. Okay, use the information supplied in 24.9 and calculate the variable manufacturing overhead rate variance. Oh, okay, it's a different variance. It's not the total, you see. Do you see that? There is a difference here. This was the total variance, not the variable. Okay, this is total variable manufacturing variance. Here,
it's
this was
just the variable
rates.
manufacturing.
Okay, the rates.
Right.
Okay, it was a rate. So the difference here was 24 and 25. Because remember, if we look at the variable overheads, let's go back. Okay, what were your variable overheads here? 25. What were the variable overheads here in the actual?
24.
24. Okay. So there was that 1% difference. Remember, we had that 24 here and the 25 there. Right,
Yeah.
per hour. So the rate is a 1 rand difference in hours. Okay, so
Yes.
here they're not looking at the total. Here they're only looking at the variable portion, the variable manufacturing overhead rate for the overheads.
Okay.
Okay, so
As
here
a
they
whole.
said the actual rate, okay, times the number of hours. All right. Remember, if it's the standard variable overhead, standard variable means what we expect to use. Right. So we expected 25 Rand per unit and we used 410 hours. See that?
Yes.
Okay. So that's based on the actual. So it's the rate, not the total. It's only the rates. The rate meaning
Okay.
how much did you use? 24 Rand an hour, 25 Rand an hour. That was actual, that was budgeted, and the difference, okay, was a variance of 410.
Okay, yes.
Okay, because of that 1 Rand difference. See, they've even shown it here.
Yeah.
The 1 Rand difference, because of the actual hours being 410, there's going to be an additional 410 Rand variance. See, that's actually part of a recon almost. Okay, because you're trying to reconcile what you had here. So if you look at this question again, okay, they're stating that because this rate was 25 and the actual was 24, there is a 1 Rand difference in terms of variable costs. Okay, so if I've got labor hours of 410, that means every hour is going to incur an extra 1 Rand in terms of cost. Does that make sense?
Yeah.
Okay. Right. It's just a different way of looking at it. It's breaking it down into the rates rather than the total. Because here they said total rather than rate. The rate was the 1 Rand per hour.
Okay, and that's where the difference comes in.
That's the difference, yeah. Okay, which is that you read it
Okay.
carefully because here they said total and there they said
Mm.
variable rates.
Yeah.
Okay, but it's the same information though, same question.
Mm.
All right. Yeah, the nuances are quite hectic. You need to just read the question carefully just to get the right interpretation. Because if it's a rate, then it's a
Mm.
per unit basis or per hour basis. In this case, we're looking at the number of hours worked.
Yeah.
Okay.
Yeah, I think if you understand exactly like what's going on, then it's also obviously
It's just the
easier.
wording,
Otherwise,
yeah.
just get confused.
Yeah, it
Yeah.
can get confusing because of the wording. So just be careful when you get a question, just look at the wording carefully before you actually do a
Mm.
working. And then you can just reference the right calculation if you need some sort of reference to look at
Mm.
when doing your. How are they testing things this semester? Is it still online, hey?
Yeah, it's still online.
Okay.
Although, so I didn't write in June. I've got I applied for an aggregate. So last year you have to download it and then hopefully print it if you can. And then I did it on Excel, saved it in PDF, and then sent it.
Okay, okay. So it's
So
it's it's basically
mm.
like an assignment kind of, but obviously timed.
Yeah, this is the time because I drove to like
Okay.
Postnet and I was waiting there for it to open and then I
Okay.
went home and then yeah, so and it's still only 2 hours. They don't really give you extra time
Wow, yeah, that's
too much.
hectic,
I
eh? And
think
and and this is a big
yeah,
module. Wow. I would
yeah,
think they
I
would
think
give more
it's
time, yeah.
yeah, I think it's like, to get people not to be together and the
Yes,
whole cheating aspect of
possibly.
just yeah.
Okay,
So
interesting.
can we maybe do activity 24.16? It's on
Yes.
page 91.
Okay.
This
Right.
is selling price variance.
This one, selling price variance. Okay,
Mm.
this is a nice question. All right, so okay, let me first ask you, what do you understand by the word selling price variance? Like what does that mean to you? Like do you have any like clue on what that entails?
Okay. It's what we thought we were going to sell it for and what we actually sold it for.
Okay, that's a good place to start, yes. So
Mm.
selling price again is going to be based on the standard and the actual. Okay, so
Actually,
budgets, actual.
yes.
Okay, obviously the budget would be the standard cost. In this case, standard costs don't apply because you're looking at the selling price. So you're looking more at
Mm.
revenue. You're
Okay.
looking at sales.
Oh, as a
Okay,
whole.
so that would be a target, yeah. So remember, as a business, your sales targets are very important. You want to hit those targets. If you don't, your business will probably suffer some sort of financial difficulty in terms of maybe not meeting cash flow or paying certain expenses and so on. All right, so if we look at the situation, what do you see here?
So we've got,
Units,
yeah, 2,600 squash balls
total,
sold for
and per unit.
46,950, and the standard selling price per ball is 18 Rand.
Okay, all right, you see that?
So
Okay,
that's
so
all actual information.
no, that's not all
And
actual.
oh
This
no,
is
the standard selling price is the
is the
okay,
budget,
yes, yeah, yes.
18 Rand.
So we're gonna say 46,950 divided by 26. Hmm. But that's 1805.
Okay, remember, what are you trying to determine? You're trying to compare what you expect in terms of budget versus what you expect in terms of actual. Does that make sense?
Yes.
Okay, so if you know that the standard price is 18 Rand a ball, how many balls did we sell?
2,608.
No, 2,600
Uh,
balls. We just read it. Have a look at the question.
okay. So we're not taking the
No,
46,950
no, 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 no.
divided
Wait, 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 wait. Okay.
by,
All
oh,
right.
okay.
You're missing the point. Okay. Remember we said,
Mm-hmm.
okay, the standard price is 18 Rand a ball. Okay. We just spoke about
Mm-hmm.
the targeted sales, right? We said that if we're
Mm-hmm.
budgeting, okay, based on the standard cost, or in this case, the standard price, you said you're going to sell each ball at 18 Rand. And how many balls did we sell?
Okay, 2,600.
2,600. So on your calculator, type that in. What do you get? 26 times 18. I'm getting 46,800.
800.
Okay, remember,
Okay.
it's important to understand theory. Theory means, okay, if you're looking at this budget, okay, this amount, what does that amount actually represent? If you're talking to me about, like, if you're talking to me about interpretation, what does that mean? Like, break it down in terms of words. Like, what does that amount represent?
How much we are hoping to sell
Yes,
it for as a whole.
exactly. Remember, this business is going to want to sell, okay, a certain number of balls to make a certain profit. Here they want you to work out the selling variance. The selling price variance is going to be based on what you had actually sold. Does that make sense?
Yes.
Okay, so now I need to consider, well, if I'm selling a certain amount of balls and I've made a certain profit, do you see that? Okay, I need to know how much did those balls actually sell for. So how do I work out that?
Taking the 46,950 divided by 26.
Yes,
Yeah.
gives you how much did you actually sell each ball for. Grab the calculator again.
Yeah, so it's 18 rand and 5
46
cents.
950 divided by 2600 equals, I'm getting 18, comma 05769. Does that make sense?
Mm-hmm.
Okay, so what does that represent? Talk to me. Tell me what that means.
Okay, so we sold it for what 5 cents more per ball than
Yes,
what we wanted to.
basically correct. Good. Okay, so if you look at this situation, okay, this situation tells you that in terms of what we had budgeted for, we expected to sell each ball at 18 Rand a ball, but actually our revenue, you can see, look at the revenue. The revenue is more. The revenue is a
Yeah.
bit more than what you actually had. See?
Yes.
Okay, so you know this is a favorable variance, right?
Favorable. Yes.
We
Mm-hmm.
just don't know how much favorable is the variance. Do you agree?
Yeah.
Okay, so now if you're looking at the situation, what is the variance going to be? It's going to be the difference.
It's the 5 cents.
Well, you don't have to use the 5 cents. You can
Well,
just subtract.
yeah,
What
46,
is the 46,950
950.
minus the 46,800? That looks like 150 to me.
Mm-hmm.
That's a positive
Yeah.
variance.
Okay. Yes.
Okay, so I think don't get confused by the wording, because remember,
Mm-hmm.
at the end of the day, it's literally actual versus budget. That's all you're doing.
Mm.
So you could have just gone with the 446,950 less the 46,800. Okay. The only
Yes.
reason why I'm breaking it down is because remember, when you're looking at budgeted amounts, okay, you're always going to have three things. You're going to have price, you're going to have quantity, and you're going to have total.
Yes.
If I'm looking at revenue, ooh, I need to change color, otherwise you can't see that. If I'm looking at revenue, then I'm going to have selling price times quantity sold. Does that make sense?
Mm-hmm.
If I have cost, then I'm going to have quantity produced or quantity produced, and I'm going to have cost price. Does that make sense?
Yes.
But you're always going to have those things. All right. So here, have a look. What do I have here? I have quantity, I have selling price, and I have total revenue. Okay, it doesn't matter if it's budgeted or actual, you're always going to have those three components
Okay.
because you're looking at production and you're looking at sales and you're looking at costs.
Mm.
Okay, all right. Are you happy with this? What does the answer look like? Let's see.
Yes.
Okay, they've done. Okay, they've done the actual. Okay, see again, they've shown the working here. There's the division.
Mm-hmm.
Okay, it looks like they've rounded it off though. 77. Okay,
Yeah, I
but you
see.
still get the same variance. The answer's still the answer, yeah. There's no difference. They've
Yeah.
just broken up into per unit. The variance is just the totals. You can literally just show that. 46,950
Yeah.
less 46,800 gives you a variance of 150.
Okay.
I don't think you need to show all of this, but they have, which is fine.
Yeah, it's just for the.
Okay. The variance is favorable because obviously you want your income to be more than what you expected. Okay. I think maybe a tip that I can give you when you're doing calculations in your exam, make sure you write down everything. So when they give you a question like this, okay, remember I wrote down budget here, then I wrote down actual here, and then I wrote down everything that related to budget, and I wrote down everything related to actual, and then afterwards I compared the two.
Yeah.
Okay, because those should be working marks, eh?
Yeah.
We don't know how much this was out of. This might be out of 2, maybe 3, maybe 4, depending on the marker.
Okay.
Okay, yeah. So don't forget to write down things, even if it doesn't look exactly like this, because remember, it'll never ever look exactly like this because you would have done it slightly differently. Whether you've got budget first and the actual second doesn't matter, as long as you've got all these figures, as long as you come out with the right variance, they should give you the marks.
Yeah, and they say the more you write
The better.
and show your calculations,
Yes.
the
That's good advice.
more
If they've
you
told you that, that's very, very, very good advice. Okay.
Yeah, but now if we're doing it online, was the one year we had, it was just like a very long multiple choice question.
Ooh, yeah, that's
So
not
then
good.
it's tricky because you can't really like make, pick
Yeah.
up marks anywhere, even if your answer is wrong, if you don't get anything in between.
Yeah, with multiple choice, that's never good. Yeah, if it's written's better because then there should be marks awarded for the workings. Yeah. Okay, but at least you said it is written, but they'll just give you the time you do it and then submit, yeah, which is fine. So I don't think
I'm
you have to worry about that.
hoping, I'm hoping because I've got economics and then business management and accounting information systems. And all of it, we're not doing exams. We just got
Interesting.
like
All assignments.
lots of tests
Yes.
like during the semester.
Yeah.
And then it's going to be, I don't know, like something similar. The one we're just taking that they're just taking all of the tests
Interesting.
and then working out. Yeah. So that's why I'm not too upset because if we have an exam, I'm just basically doing MAC as like a written exam and
Okay.
where it's so
Yeah, that's
I can
interesting.
do a lot of
All right. So you're feeling quite confident, which is good. You just need to try. What I would do if I was you is maybe bookmark or even print out certain important examples just as a guide. Because in a worst case scenario, you can reference it if you get into a bit of a pickle and you're like a bit worried.
yeah.
Okay.
I've got little tags here in my
That's good.
study guide.
That's very good. Okay.
Just
All right. What's next?
We're
Oh, I'm just looking at
gonna
the
do
time. I think it might
a
time out. Yeah.
reconcile.
It might time out, so I think we might have to. I think the link is the same. Yeah, it should be the same link. I think the
Okay.
Zoom thing is going to time out, so it might.
Yeah, I see.
Yeah, I see less than a minute. Okay. All right. Maybe in the meantime, go have a look and see, because I'm going to have to restart the session again just so that we can
Okay.
continue. But yeah, I'm looking at this. This looks like a self-assessment activity.
Yeah, and then after that is the reconciliation.
Oh, okay. There we go. Yeah. All right. Okay. Let me maybe restart and then we can continue. Maybe just look at what you want to cover next.
Okay, no problem. We'll
We can
get
try.
through it.
Let's try. What
Let
question?
me see. It is activity 25.1 on page 102.
102. Okay. All right.
It encompasses everything because it's got all the variances
Okay. Then it's a
in there
nice
as
question.
well.
Yeah. So, okay. So, what do you do in this type of situation? Is this the start?
Yeah.
Okay. All right. So they're making lasagna. Okay. All right. They've given you lots of information. Okay. You talk to me. You tell me what information has been given and why is it relevant. Remember, scope is important. If you know what they've been given, then you know how to deal with that situation. So when you read through the information, highlight what they've given. What have they given you here? What do you see?
Standard variable cost for direct material, direct labor, and then the variable overheads.
Okay, what is
and
that
the selling and
representing?
distribution
What is this
costs.
representing?
It's what they budgeted for.
Yes.
It's what they wanted it to be.
Good. Okay, so that's the first thing to note. Budget is important because if you know what they've given you, then you can relate it to workings that come up later on. Okay, next, what else do they give you?
And then the actual results for the period.
Okay, yes, actual is obviously actual. All right. So remember, this budget can potentially be adapted or changed to meet the certain level of production depending on what they're asking you to do.
That way, is that when you flex the budget?
When you say flex, what do you mean by flex? Not
Like, I know we had a flexed budget. It was one of our, so sort of reconciling. And I'm supposing like the difference, I don't know where the difference would go. What do you do
you have a
with the
page reference
difference?
for that? Let me just double check to see if you're on the right track. Because this is part of standard costing.
Does it not flow into budgeting?
It does if they ask you for a budget, did they?
Okay.
No, this is financial statements.
Oh, okay.
Financial statements.
Yeah, at
When you
number
say
D,
flex, what do you mean by
they say-
flex? Are you talking about
Then
those
it's a different
tables
unit.
and then you've got to like put amounts in the different months?
Yes,
Is that what you're referring to?
yes.
Is that do you call that flexing?
Is that not? Let's see where.
That's interesting. Okay, that's a new way of describing it. I wasn't aware that it was called flexing, but yeah. Budgeting is budgeting. Budgeting requires different expectations, and then you're forecasting. Forecasting is the right word.
Okay.
But I mean,
For
it's
the
fine
budget.
if there's a different term for it. But where did you see that?
Oh.
Is it in the textbook? Flexing.
Yes, we had a flexed budget.
Okay, can you tell me where that is? Then I can comment further on it.
Flexing the budget. Okay, so study unit 22.
Page?
It's flexing the budget.
Page?
Page 29.
Okay. Wow, that's very early on. Ah, okay, I see what you mean. All right, here. Flexing the budget. The original official budget is approved on the basis of specific sales and production levels. We classify the original budget as a fixed budget because it is based on fixed sales and production. And then if you flex the budget, okay, the word flex is referring to flexible, so where you alter the budget based on the production.
Okay.
All right. So in other words, what we were doing earlier was actually flexing. Okay, but yeah,
Okay.
I don't know. This is jargon. Okay, flexing the budget. That's just jargon. Okay, it's jargon because it's trying to draw up a budget like this. Okay, based on a certain level. So see, if the actual is 6,000 and the fixed budget is 5, then you need to inverted commas flex the budget to make it 6,000. Do you see that?
To make it 6.
Okay, and we were basically doing that earlier. Remember that?
Yeah.
Remember that question where you had the 500 units?
Yes.
And then we made it to the 525?
525. Yeah.
Okay, inverted commas, we're flexing. But yeah, that's just jargon. All right, but I see what you mean by flexing now. Now I understand.
So that's not the reconciliation.
We can look at the recons later, but yeah, let's just focus on this one. Okay, so in this situation, they said the units were 5,000 manufactured and completed and 5,000 sold. Do you see that?
Yes.
Okay, notice here, the standard costs were given. You weren't given a budget based on a certain number of units. So for example, if there were 6,000 units here, in terms of the budget, then we would inverted commas flex and make it 5,000. Does that make sense?
5,000. Okay.
Okay, but that wouldn't apply here.
That's probably why they didn't give it.
Okay, yeah. Okay, don't look at the solution. If you're looking at the solution while we're doing this, you shouldn't be doing that. You should try
I'm not.
first, then look at the solution.
Back.
Okay, yeah, the solutions look good. Okay, they don't show any of the flexing. I wouldn't have expected flexing here anyway. Okay, it's a very long one, yeah. All right, but let's take it step by step. Okay, what do they ask you to calculate first?
Budgeted statement of profit and loss based on the standards provided.
Okay, so if I'm looking at standards, which am I looking at? The top or the bottom?
On the top.
Exactly. All right, so this is all maths. You're literally going to draw the template. The template, which is accounting. Okay, you're going to show the profit and loss. So obviously you're going to have sales, cost of sales, gross profit, other income, other expenses, all listed nicely, and then net profit at the end. Agree?
Yeah.
Okay, remember, they're telling you to use those costs. Okay, so that means direct material, direct labor, manufacturing overheads, all of that will be part of the cost of production. Okay,
Yes.
variable and selling distribution, that'll be a separate cost. That'll be other expenses. Okay, and then obviously selling price will be revenue. Does that make sense? Okay, so each of these will be separate costs on that statement. They said assume actual volumes and budget volumes are identical. So that means you're going to use this 5,000 units. Happy?
Yes. Yes, yes.
Okay, so it's literally going to be 5,000 units times whatever the price is, times whatever the price is, times whatever the price is to get the totals. Okay, and they should have shown something that looked like that. Let's see. Yes. Okay, there's the units. There's the sales price. They just multiply it. See, the 140, look at the 140. Here's the 140.
Yeah.
Okay, it's literally building a accounting financial statement based off this, not that. Okay, because remember, the accountant would have an accurate measure of it. The accountant would actually use this. The financial manager would use that, and then they would compare the two.
And then the next question they wanted based on the actual results.
Yes. See, now you're going to do exactly the same thing, but now which one are you going to use? The top or the bottom?
The bottom.
Exactly. Okay, so now you're going to show this as the sales or the revenue instead of the 500 times the 440. Do you see that?
Yes.
Okay, but it's going to look exactly the same. It's just the inputs are different in terms of data.
Yes.
Does that make sense? Okay, can you see how we're doing this?
Yes.
Okay, so A and B are actually easy questions. C, this is where the MAC comes in.
Yeah.
Because now you've got all these little variances and stuff, see?
Yes.
Okay, but if you've done the budget and you've done the actual, then you can just compare. Okay, because material, what are you going to do? You're going to look at the material here, and you're going to compare it with the material there, and you're going to get the total. Does that make sense? And then the budget is going to be compared to the actual, and that'll give you either favorable or unfavorable variance. Okay, so actually, if you've done A and B perfectly, it'll be a lot easier to do C because a lot of it will already be part of the first two.
Yeah. And it's neatly set out.
Yes. Yes, yes, yes. All right, so this table would have come from all the budgeted figures. See? 5,000 units times 40 Rand, 32 Rand. There's the 32 Rand, there's the 40 Rand, there's the 6 Rand. See it? And then there's the 14, which is the variable cost. There's the 14. All right, there's the net profits. Okay, do you struggle with this? Because this is actually quite basic. This is quite simple. This is actually more maths than Mac. There's no Mac here, actually. This is all mathematics.
Yeah, this is just accounting.
Well, yeah, accounting because of the structure, but I mean, it's all maths just because it's units times price, units times price, units times price gives you total.
Yeah.
Remember earlier I said price times quantity? That's the basic one. If it's selling price times quantity sold, then obviously that'll give you revenue. If it's cost price times quantity produced, then that's obviously costs. Okay, total revenue minus total cost gives you profits. Okay, it's all maths, so this is the maths. Have you done DSC 1520?
No.
Okay. If you did,
I did DSC 1, I think it was 1500.
Oh, okay, yeah, that's probably a different one. Yeah, with that one, they do a lot of these workings, a lot of them. Like, there's a lot of selling price, selling price, cost price, all of that stuff, yeah. But it's fine, okay? It's the same here, price times quantity, price times quantity, price times quantity, and then just add up or subtract.
Yes.
Are you happy with that?
Yes, yes.
Okay.
And
I'm just
then,
trying to go through it a bit quicker, just so I can show you the logic behind it. Okay. The logic is take the budget and use the volume to get
volume.
an estimate of how much you would expect, and then do the same with the actual to get an estimate. Okay, because then they would have done the same thing for. So this is the budget, see?
Yes.
And then look at the actual.
If the units weren't the same and it was, for instance, 6,000,
Then you'd
then
have
I
to
would
flex the budget.
still use 6,000 for the budget and 5,000 units for the actual.
No, 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 no. It has to be
Or
apples
would
and
I
apples.
have
You
to
can't
take
compare
it?
6,000 units to 5,000 units. No.
Okay, so I'll have to get it to 5,000. That's where the extra.
Well, you'll have to get it to the actual. So if the actual sold was 6,000, then you would have to flex the budget to make the budget from
Make it
from 5 to 6.
6,000. Okay.
Does it make
Okay.
sense?
Yeah. No, like
All right, so
you have
here's
to
the
get
actual,
it to
see?
the apples and apples. Yeah.
Everything is fine. But now have a look at this. If we're talking about variances, can we compare labor? Yes, we can. 150 here. And what's labor up here? 160 there. Do you see that?
160. Yes.
And then you can compare variance. So if you look at the section C, okay, here they looked at material, but I mean, where's the labor? Where's the labor? Where's the labor? Here's the labor. There's the labor. See, 50 and 60, 10,000. See.
Yeah. So you'll be able to see it
Yes.
immediately, actually.
Yes. So actually, this question looks very long, but in actual fact, all you actually need is A and B. If you've got A and you've got B, then you can do the variances because you can compare the totals. Because this is the budget based on the standard costs, and this is the actual. See that?
Yes.
Okay.
That's
Is that all right?
Yeah.
Are you
So, and
sure?
then D, they say they reconcile the actual results with the budgeted results.
Okay, let's
Is
have a
that
look at
just
D.
comparing? Or
Hold on.
is there
Let's see what D says. Where is D? Here.
it's also just
Reconcile of the
comparing.
actual results with the budgeted results. Oh, okay. I see what they're saying. All right. So let me explain what the budget does. All right. So having done A, you know what the budget looks like. Do you agree? Then you did B. Then you know what the actual looks like. Do you agree? Okay. When you looked at part C was looking at the differences between the two. Does that make sense?
Yes.
Okay. Now, if we're looking at D, D is something different. D is a reconciliation. Okay, so the recon is a bit different because when you look at the recon is going to be focusing on the variances that you've identified. Okay, so have a look at this. Variances, favorable or unfavorable. This was based on the budget versus the actual. Do you agree? Okay, and this is everything that you would have calculated in point number C. Agree? All right, so in part C, you would have highlighted the material variances. You would have highlighted the labor variances. You would have highlighted the manufacturing overhead variances. Same thing with the sales, all the expenditure, all the costs, everything. Okay? The last thing you would have to do is you'd have to compare what the difference is, what is missing. So if I look at this, let me go show you that here. Where is it? Here. No, further up. Here. Okay, have a look at this. What does this represent? What does that represent?
The profit.
Yes, but the profit based on what?
5,000 units.
No, based on your standard, based on your budget, based on your
Yes.
expectation.
Okay. Yeah.
Okay, so all of this is inverted commas, okay, the ideal situation. Does that make sense?
Yes.
Because it's the budget. Okay, was the actual more or less than this?
C, it was more.
So is that good or
it's
bad?
already unfavorable.
Is that good or
No,
bad?
no, no. It's favorable. Yeah.
Good or
Because
bad?
we made more than what we expected.
It's good, right? Do you agree?
Yes, yes.
Okay, so when you're looking at a recon, up at the bottom we saw a net profit that was less than what we expected. Now we have a variance here that is more than what we expected, and this is the actual.
Yes.
Okay, and then looking at the solution that we saw earlier, the recon, I think there's an 8,000 Rand difference here. 177,600 minus 169,600 should give you 8,000, hey?
Yes, it does, yes.
Okay, all right, I saw that earlier when we were looking at the recon. Okay, so I'm just showing you this at the top. So at the top, you had the budgets. At the bottom, you've got the actual. Okay, remember, this is a net profit variance because the profit was 8,000 bigger than what we expected to be in the first place. Does that make sense?
Yes, yes.
And then this 8,000 needs to be explained. In other words, the reconciliation is identifying what this 8,000 is attributable to. In other words, remember, think about this. A business is going to sell goods, okay? The business wants to sell 5,000 units. Did we sell 5,000 units in terms of what we had budgeted?
Yes.
Yes, you did. So it was in line with your budget. Do you agree?
Yes.
Okay, so the only difference here is that this net profit figure was more than what you had budgeted for. So that could have been attributable to sales if you sold those items at a higher price, or it could have been attributable to costs that you would have minimized. Maybe you saved on materials, so you didn't waste as much.
Yes.
Maybe workers were more efficient, so they didn't work as much. Maybe overheads weren't as expensive because there was a drop in the fuel price.
Yes.
Do you see where I'm going with this? Okay,
Yeah.
so the reconciliation is basically an explanation of all the variances and what attributes to that big difference, that 8,000 that we saw in the net profit. Does that make sense?
Yes, yes.
Okay, so if you look at their working, just to explain it, where's it? Here. Okay. Have a look at what they've given you here. Let me explain it so you understand what they've shown. All right. Remember, this is a reconciliation. A reconciliation is comparing what actually happened to what we expected. All right. Our actual was 5,000 units, and so was our budget.
Yes.
So that means the difference must be attributable to something else. Okay, they already told you here that there is a favorable variance in the net profit, which was 8,000. Do you see that?
Yes.
Okay, that's the variance there. Okay,
Yeah.
that variance is going to be attributable, okay, to either material, labor, overheads, sales, or fixed costs, depending on what you've got here.
Yeah.
Right, so if you look at the favorable variances mean your sales are more than expected, which they were, or your costs were less than expected, which they were. Does that make sense?
Yes.
All right. So based on all the favorable variances, it got us to 97,500. Do you see that? Okay. If I'm looking at the unfavorable variances, that only got us to 89,500. All right, so what is the difference?
The 8,000.
The 8,000. So the 8,000 is confirmation that you have saved on certain costs and that you've exceeded certain income. In other words, you did better in terms of sales and you managed your costs a lot better than you had expected.
Yeah.
Because
So
the
this recon is
difference-
just setting it out.
Correct, yeah. So recon is just highlighting the differences that you've identified in the variances. Okay.
Okay, I will definitely do a
Remember,
few more of the recon questions.
okay, remember all of these variances, every single variance here would have come up in part C.
Yes.
Okay,
So
because
again,
part
it's
C
just
highlights all these
setting out.
variances. Do you see them?
So most of the work is in A and B.
Yes.
C is just
C and D is just analysis. That's all it is. C and D is analysis. This is a summarized analysis of all the different variances, favorable and unfavorable, to reconcile the profit with those variances that you've identified.
Yeah. Okay. So they shouldn't, if you did it right, they shouldn't
balance.
obviously just interpreting it right. There shouldn't be a difference.
Well,
Well, there's
remember,
a difference, but I mean,
the
yeah, it's the 8.
difference would reconcile with the net profits.
Yeah, yeah. So it's just sort of setting it out.
Yes, because your net profit was more than expected.
Mm,
So it's explained by all of those variances.
mm. Okay. So it's,
Okay,
yeah, like an all-encompassing
correct.
question,
It
pulling
is
it
all
all
encompassing
together.
because it's showing you everything that took place in this particular business. Yes, that's right.
Mm. Okay.
Okay. All right. So see, that wasn't
Right.
too long. We
Thank
managed
you,
it. It was
Anthony.
okay.
Yeah, yeah. I'll just go because like I said, I want to really do the like 100 of the variance questions if I can.
Wow. That's really impressive. If you have time to do that,
Because
that would
once
be
you
amazing.
understand, well, not actually 100, but you know what I mean.
Okay.
Yeah, just because then, like they can't really catch you out because
Yes.
you understand it
Yes.
150%, and then they can throw anything at you because
Yes.
they get really flustered, and I'm like, what? So
Okay.
yeah,
Yeah, I
like,
think the
yeah,
biggest tip I can give you is just look at the question and remember to write down those basics depending on what they're asking you for. So if it's any question about variances, then make sure you have budget versus actual. Make sure you keep them separate. And then under budgeted, do all your working, show the standard costs, and then under actual, do the same thing. And then afterwards, relate the budget to the
yeah.
actual.
Okay.
Okay.
I'm going to definitely do that. Thank you so much, Anthony.
You're welcome, Zonica. It's a Friday, so I hope you have a good weekend. So will you get back to
Thank
me
you.
then on which days you want to
Definitely.
host the next two? Okay.
Yeah, yeah. Like I said, it probably won't be next week.
That's fine. No
Just so it
problem.
gives me enough time.
Yes.
And then
I'd
I'm
rather
gonna,
you
if
have
there's
more time
any,
to go through more material.
mhm,
At least then when we
yeah,
do have these sessions, we can focus on the problem
yeah,
areas.
yeah, yeah. Okay,
Okay.
definitely. Thank you so much.
All right. You're welcome. Thank you, Zonica.
Enjoy your
You
weekend.
too. All right.
Thanks.
Bye.
Bye.